Hi, this is Mike, and we're looking at this particular chart here right now is the 10-year bond yield. So in my last video, I explained to you how I believe that this particular chart is, the last move, suggesting that the last move down in a large zigzag is occurring. Um, but I've got something very interesting to talk about here in this video, and that talks about the idea that what we could in fact be looking at right now is actually the start of this going completely into the negative, right? So this particular this particular correction here, right? It basically says, okay, we had a wave one down in 1981. Okay, it says we had an A, B, C, D, E wave two. So resistance is not far away from where we are now, right? 6.7. However, here I can see a five-wave move. It's a weak five-wave move. I've labeled it A, right? But what happens if this is not actually A? What happens if this is actually wave one of a larger move incoming, right? Now, I want you to pay close attention to this video because it's basically indicating that the stock market could potentially go to zero, right? And in this video, I'm going to lay out why I believe this might actually happen in the not so distant future. It could even be about a year away, roughly, right? So this doesn't make any sense that this pattern would only go this low because if you remember the last video, which I'll link down below, wave A was pretty long, okay? It was actually pretty long. So this particular wave down here from these levels, right, from 16 on this chart, it doesn't actually do this particular wave any justice at all in terms of length. And for this to be a wave three, it's impossible because it's a weak leading pattern, right? It's a wave one, right? And it can't be a wave D like I thought before, even though it would make sense because this last correction that started in 2016, it definitely just wouldn't make sense. So what I believe is getting ready to happen is that yields are going to plummet. Okay, this is what I believe is going to happen. I believe that yields are getting ready to absolutely plummet, right? To go just way down, right? And I think that this is basically a problem that is not good news, right? I don't think that it's good news, even though it would seem as though the bond market is, rallying because it's inverse related. But I think it's something's going to break in a sense, right? I think that this current move up is heading towards the end of a wave two, right? And now I'm going to head over to the Dow Jones so I can explain my analysis. So yes, I have changed my view, but based on the long-term pattern, right? So this particular chart joins on the European markets to the US market, right? And I've been looking at this chart for many years, but lately I've started to make some breakthroughs in the long-term pattern, right? And to me, it suggests that it's some kind of move up that's ending. Okay. Obviously, I don't have data before this, but I do see what could definitely be considered a weak five-wave move, right? Now, this move up since the Great Depression to me is an expanded type 2 zigzag, right? So it's actually, I have changed the view to my old view and then done more research on it and then basically kept it. So to highlight my point, a weak 5 wave move, how could this latest move be part of that? Well, that's easy, right? Because what happened is that if you look at a normal zigzag, it's normally looks like this: wave A, you wave B, and you wave C, right? And then you had your correction here for wave 2, right? But then you can see how wave 3 started to expand, right? The correction started to expand the way that it did here, right? And yes, wave 3 is longer than wave 1. Now, this is where it gets interesting. My analysis on this Great Depression wave that I thought was actually just an expanded type 2 zigzag as well, it actually makes more sense that it is actually a complete and sharp correction, right? Which is alternation between waves 1 and 2, right? And if I go down to the small degree, I can actually see the complete correction, right? So this last move up since the Great Depression being the most expanded of type 2 zigzags is actually what's been going on ever since, right? And now I will show you the actual analysis that I have been working on recently. That's probably why you haven't seen me post much, because I really have been trying to understand what it is that we are looking at here. And this is actually quite amazing when you do this type of analysis, right? You can see we had our wave A, B, C, D, E. Okay, so the GFC was what I thought the basically the corona wave was, but the corona wave was an E as well. Okay, it was the end of wave 4 of the last 5 wave move, which is supposed to be, the answer to the initial move up after the Great Depression. Okay, so I'll just show you now by marking it out here, making it a bit thicker. Okay, so this wave A down here, the wave C started at the GFC. So yes, it's gone longer. It's already reached the height or the length of it, right? But it's not quite complete yet. Okay, and you can see by the weakness of this move that yes, it is the last move. And no, it's not a 5 wave move. Okay, but it is a fifth of a fifth wave, right? Now, what does that mean, and why am I saying that, this could go to zero? Well, if you understand what a weak 5 wave move is, it doesn't matter if you're into Elliott wave or Arias wave, it's the same answer. The whole thing gets retraced back to the beginning, right? Now, on this particular chart, that would be back in basically the 1600s. But we don't have data that goes that far. And if you're using this particular chart, it would be very close to, if not zero, right? To retrace the entire move that's happened since that time. Okay. Weak 5 wave moves get completely retraced, right? And that there is also happening in the weak 5 wave move that we're seeing in the bond yields, right? That's why it's shot back up again, because the previous wave 1 was a weak 5 wave move. So it's retracing the whole thing, but it's going to then stop at a certain point and then reverse. So I believe the reason that it's going to reverse so much is because of what's coming in the economy, right? This very expanded last move up in the entire Dow Jones, right, is basically the last move up. So you could just imagine if you stretch out like a spring, like a really strong spring, and you try and stretch it out, uh, what's going to happen when you let go? It's going to spring back with full force. So that's essentially how I look at 5 wave moves that are weak. right? Or if you're an Elliotician, ending patterns, ending diagonal. Okay, but this one is what I would call an overshoot. An overshoot, definitely overshot, like absolutely in the most insane kind of way. And because it's such a long-term pattern, it's understandable why. If you think about all the stimulus, money printing, and manipulation that's been going on during this time, it's not hard to understand that this is the very reason why this whole thing will collapse. And much like oil that went to zero, this, I believe, will also go to zero, but so will the yields. The yields will also go extremely negative. And I believe that this could basically lead us to some huge deflation, um, some pretty big, how can I say it, uh, like universal basic income, and the CBDC might actually come to fruition during this, what I would call a reset. Right, it seems very likely to me that this is the thing that's going to happen soon. So if we just go to the daily chart, I just want to take you through the waves that I finally sort of begun to understand that's caused this pattern to be looking this way. Never has been very accurate or clear to me, this pattern, but I think now there is a good chance that potentially it has made itself a bit clearer. So I think the most strangest thing about this entire move was the wave 2 correction being so expanded, right? So the wave 2 correction expanded up far more than would be normal typically. It basically did not, it was not deep at all, right? If wave 1 ended here, literally we had zero pullback. In 2010, we had definitely like a type 2 expanded correction. And then we had wave 3, which went from basically 2016 to 2018. And then I believe what happened here was we had a very deep correction because alternation, and also I believe this is also a weak 5 wave move, which means that the price action of wave 4 goes into the price territory of wave 1 and 2, or in this case wave 2. All right, it barely touched it on this chart, and in other charts I think it went a bit deeper. However, I think the point here is that wave 3 is longer than wave 1 by a small margin, and I think that move that happened after it bounced after that 2018 shock move down was just that final top there to make it just longer than wave 1, which happened, because then wave 5 ended up being longer, even up to the highs of 2022. But I do believe that the last move is underway right now, but I don't think we've seen half of it yet. I think, maybe half of it, probably a bit less than half. So I think that we still have a little bit more sideways price action before we actually see that final move up that should see this whole entire move up since the Great Depression completed, and basically the entire move up since the GFC completed. And then I believe that's when we'll actually see this entire market collapse. Okay, I think it will go to zero, and I think it will bounce hard when it does that, similar to what oil did. And I think that a lot of other stuff will follow with that. All right, so that's my take on the Dow Jones years in the making analysis, taking the best of the best, putting it together, and really just trying to make heads or tails about what the future holds. And this particular thing is pretty insane. I know it's the type of stuff that sends you more trolls, but you know what? That doesn't bother me. What I've been trying to do recently is actually, like I said, make sense of where we're heading and why we're going to see something this collapse, why we're going to see cryptos keep falling, and why they would bounce so hard as I'm expecting them to do after this happens. right? So I think I'm getting very close now to basically answering that question. And I think that what happens after this thing goes to zero is that we could potentially be seeing the start of a whole new, entire, massively exponential bull market, right? That will send this thing absolutely skyrocketing upwards. And I think that, the bond yields kind of indicate that that type of thing is very possible if we're going to see a wave three down in interest rates and the yield to go deep, 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 deeply negative. There's got to be a reason for that. And I think that the Fed and the market will basically follow that straight through, see it straight through, but it could be something like a black swan event. I think it could definitely happen in a very extreme and fast manner when it does happen, because I just simply do not see the I simply do not see this affecting the currency markets too much. I don't know why. At this stage, my euro analysis still remains the same. So I do, however, have said previously that I do expect gold to collapse to basically zero as well, and silver as well. Um, how quickly this occurs or how this all plays out, I'm not sure. It's definitely small. There's more analysis on the way. I just thought I'd share with you what I've got so far over the last 2 weeks. I've just gone down that rabbit hole because I've just been looking for answers. So once again, if you want to learn AriasWave, it's only going to be available until the end of April in its current form, and then I will no longer be offering that particular program. So if you want to get in there and have a look at that, sign up. Uh, there's that 50% off. So thank you for watching, and I'll catch you on the next one.